Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
Welcome to Master of the Markets. I'm Barry Habib at MBS Highway, created exclusively for NMP TV. It's brought to you by our good friends at PRMG. They're working for your best interest. It's a big week ahead this week. We've got Jobs Week this week. We've got numbers on appreciation on housing, which we expect to be good. So this is going to be an exciting week. There's also going to be some Treasury auctions. Now, last week we did get the 7-year Treasury note auction. That's the one that caused all the problems back on February 25th. And it did cause not as severe problems, but it did cause problems last Thursday. We saw a tepid demand for the 7-year note, even with elevated yields, and bond prices did turn negative. Also, yields moved higher, and they did so at some tough spots. We've been talking about 1.6% on the 10-year Treasury. It was challenging that level, trying to get underneath it, but then that darn 7-year note auction pushed things higher. We also got inflation news last week. We got it via the Personal Consumption Expenditure, that's PCE. It's Fed's favorite measure of inflation, and it was actually tame. Now, we expected a tame number, but I'll tell you what, next month will probably be a little bit higher, but after that, it will start to accelerate over the summer months. Look for rates to move higher to keep up with the inflation reports that we will get that will be rising. People are getting their stimulus checks here at the end of March. They'll be getting them into early April, and that will cause more spending, more inflationary pressures. But as we've seen, this wears off. If you look at last year and you look at like retail sales, big pop after the checks, and then it just wears off. So it just doesn't last. Now, that's bad news for short-term inflation, but it does mean that in the absence of another stimulus plan, we should see things calm down and rates calm back down. But I expect it to be a bit of a tough summer as far as yields go. Now, watch that 1.6 on the 10-year Treasury. That'll probably be a good time to look at locking in if we approach that level. Right now, the ceiling is at 1.75. Won't be a welcome result. If you haven't been on MBS Highway, you're missing the boat because we give you the tools in this environment to help you, whether it be an amazing way to do debt consolidation, so even if the rate's higher, they still want you to do their loan. And on purchases, we have the things that realtors want. We've got the gold. You might as well have it too, with the AVM, with the bid over ask tool, and so much more. Get on board. Hope you have a great day. See you next week. Bye-bye.
Be sure to click on the link below for your free 30-day MBS Highway trial.